Hello, everyone, and welcome into crushthestreet.com. We got another amazing guest on the line with me today. John Rubino of dollarcollapse.com, a favorite here and someone we'd like to have on regularly to give us his insights and thoughts on where we are in the economy. Visit dollarcollapse.com for more information on John Rubino. John, thanks so much for coming on the show with me today.
Hey, Kenneth, good to talk to you again.
I think an ongoing theme as a general trend is a questioning of the mainstream media, the mainstream narrative. Obviously, that's why I believe you got into the work you've done with Dollar Collapse and giving people alternatives that are unbiased, unfiltered. And I thought it was interesting news on Zero Hedge today where Newsmax surpassed Fox News ratings. And it just, I think, is interesting into terms of the control and the censorship that's going on in the mainstream. Fox News being a quote unquote conservative right wing network, but losing a lot of their followers after the November 3rd election. And people saying, hey, there's a lot of biases here, and they're not covering the story on what is going on with the fraud. I know, you don't like to get too much into the right and left of politics, but I think it says a lot about how we're trending here. And so I'd like to get your thoughts here. Maybe we could start here.
Well, yeah, maybe we should start with a little bit of background too, because where we are now with the mainstream media has its roots in some decisions that were made a decade or so ago. It used to be that the big news outlets had to go for the broadest possible audience because there were just a few outlets. When there were 3 TV stations, the nightly news on each of those stations wanted everybody. So they would go kind of neutral in terms of taking positions and authoritative. They wanted to be trusted by everybody. But with the advent of cable, when we went from 3 channels to 100 channels, news outlets figured out that they can actually make a lot more money by aggressively targeting small segments of the population and creating shows that are news themed but are really entertainment. So Fox and MSNBC became news themed entertainment shows designed to reinforce the preconceptions of
With
small
opinions.
groups of people. And Fox targeted older white conservatives, whereas MSNBC targeted kind of hyper anxious liberals. And they made a ton of money doing it, but in the process, they've tribalized us. They've created these little pockets where their viewers see only one side of the story and absolutely cannot understand how people on the other side of the story can believe what they believe. And so we've kind of divided our society into different groups who really dehumanize the other groups. It's easy to see, or it's easy to consider Republicans as subhuman if you're an MSNBC watcher, and vice versa if you're a Fox watcher. Now people have kind of started to figure that out, that the main news shows are basically biased one way or another, and that when you tune in, you don't get the full story. So the marketplace at work, they're moving on to other outlets. For instance, Facebook and Twitter are seeing an exodus into supposedly non-biased sites that don't censor you, like Gab and Parler and a few others. And on the news side, like you said, Newsmax is seeing its viewership explode. And another outlet that's seeing the same thing is the Epoch Times, which is kind of an alternative to the New York Times, but more conservative in its approach. And so I think this is a good thing. This is the marketplace at work. And I think it's a reaction to the fact that the big news outlets really took it too far. They became basically branches of a political party, one way or the other. And that has turned a lot of people off. So that's a hopeful sign. And if it continues, it'll force the big news outlets to kind of go back to the unbiased approach of previous eras. And I think that's a lot healthier. You know, we should be able to understand the biases of the outlets that we frequent, our news sources, and we should be able to adjust for it. So the era when it was impossible to adjust because we weren't being told about the biases and we didn't understand the biases is ending. And now I think we've entered a healthier time with the media where people kind of understand what they're getting and they can mix and match and pick and choose and give themselves a broad-based perspective where they, in a lot of cases, don't have that today.
It's interesting with what we're seeing now with the markets, John. I know we've tried to articulate it in the past, and we're. I like how you've described it. You know, this blow off top moment. You know, going into hyperdrive. And I think we're really seeing that now with stocks in stock mania. We're seeing that with YouTubers talking about Tesla and you know, these other EV companies, and just people becoming overnight YouTube stars. I think is emblematic of kind of what we saw during the Bitcoin bubble, you know, where you just had people starting Bitcoin channels, crypto channels, becoming stars overnight, gaining followers. And we're seeing that this year. People's having channels that started in March exploding with tons of traffic. So, what are your thoughts on what we're seeing right now with stocks going into hyperdrive, you know, with an economy that is worse off than it was a year ago?
Well, with the stock market, we're seeing two things happen. One is technological. Some trading platforms like Robinhood have come along that can let you trade stocks for free. Basically, they sell your transaction history and your order flow to high frequency traders, and they make their money that way, and they allow you to trade for free. Now, when the lockdown came, and millennials found themselves stuck in the house, you know, they've grown up playing video games, so it was a really natural transition to go to something like Robinhood, where you trade stocks as if it's a video game. You know, we're sending them stimulus checks, and they're taking those stimulus checks and putting them right into a Robinhood account. And you know, basically, when you're young and you're trading stocks, you tend to be a trend follower. You know, you tend to be very excitable and you buy what's going up, and that's what they're doing right now. So they're pushing big name, especially tech stocks, to levels that have literally never been seen before. I mean, the stock market valuation metrics are now in excess of what they were in 1999 during the tech stock bubble. So we're basically in the biggest stock bubble of all time. And one of the things that's driving that is young people buying whatever's moving. You know, you mentioned Tesla. Tesla's market cap, they're actually a very small car maker compared to Ford, GM, Toyota, people like that. But their market cap now exceeds all the other car makers' market caps put together. And it's also bigger than Warren Buffett's investment vehicle, Berkshire Hathaway. So that's a good example of what happens when too much money flows into a sector. Now, speaking of too much money flowing in, the other thing that's happening is that governments of the world feel like they have to respond to the pandemic by just flooding the system with new cash. So, you know, we're taking on debt at an accelerating rate that has never been seen before. The US is probably going to run deficits of 10% of GDP for another few years after doing it this year. And the central banks of the world have no choice but to keep interest rates either extremely low or cut interest rates from here. So all that money has to go somewhere. And some of it is flowing into financial assets. Well, that's also pushing stocks to crazy levels. Now, this presents a challenge for somebody who's a rational investor, because on the one hand, you know, all this money isn't going to stop coming in. So maybe valuation just doesn't matter for a while because of all the new liquidity coming in, stocks are going to continue to go up. That's one possibility. The other possibility is that if you look at history, every time equities have gotten anywhere near this richly valued, they've crashed. So if you want to use history as your guide, you want to be shorting this market with every penny you can get a hold of. But if you want to look at the fact that we're in completely uncharted territory and the amount of money that we're creating is unprecedented and ongoing, then maybe you want to jump on these momentum stocks and ride them for a while. And I don't have a good answer. I don't know which is the better thing to do right now. Time will tell. But it illustrates how stressful it would be to be a money manager right now, because literally either of those scenarios is possible. But we don't know which is probable yet. So whatever you do, you have the potential for a big quick gain, and also the potential for a spectacular loss. But you can't tell ahead of time which one it's going to be. So I'm sympathetic really to mainstream money managers, because they have to choose. They don't have a choice of not choosing, because their mandate in a lot of cases with a lot of mutual funds, for instance, says be 100% invested in equities. So if you have to do that, I sympathize, but I wouldn't even venture a prediction about how the next couple of years play out, just because either of these scenarios is completely possible.
Yeah, it's so true, and the nuance of that, and I suppose that's why having some balance in your portfolio makes some sense. But I was reading Katusa, and I saw his a chart, and it's interesting when people do some simple analysis that is very, very telling. It's similar to what you do, and he put in plain sight like 20% of all the money that's ever been printed in the world has been printed in 2020. Like, it's just some crazy number, that has ever been printed here in the US. And I think about that and I'm just like, man, it's so insane. It's so crazy. We're going to such greater and greater lengths to contain this bubble. And I think we've tried to talk about this and get some insight on this. But how much more can they do? Is bailouts what's is bail-ins actually, when they actually take money from your account? Sounds impossible, sounds like it would just be an end game scenario. Who knows? Maybe that sends us the Dow Jones to $50,000. You know what I mean? It does something that we couldn't even imagine because of conventional wisdom and the disconnect of fundamentals with reality.
Well, yeah, I mean that money has to go somewhere, right? And there aren't very many markets that are liquid enough to accept a 20% increase in the money supply all at once in 1 year. So that's the bull case for stocks, is that, yeah, okay, they're overvalued, but we're going to create $5 trillion. Where is that going to go? Is that going to go into housing? Maybe. We're seeing that now. House prices are spiking. Where else can it go? Well, equities and bonds are the only two other markets that are big enough to completely accommodate that kind of money creation. I would argue that precious metals is probably the biggest beneficiary of this one way or another, because gold and silver are small markets. And it won't take much of an increase in capital flowing in to just send them through the roof. And, that would be maybe, let's say, $500 billion flowing into silver would turn it into a just raging bull market. And there's way more than that coming into the market right now. So precious metals ought to do really well in pretty much any scenario in the intermediate term that you can sketch out. They might have a situation where stocks tank and that pulls down precious metals along with everything else, but that would be a very temporary thing, because governments will respond with even more stimulus to something like that. And then again, we're back to that money has to go somewhere. So I think that 2021 is a big decision year for the world's governments, because they have this choice of either letting all the entities that have been effectively bankrupted by the pandemic lockdowns to actually go literally, legally bankrupt. And I'm talking about Chicago and Illinois and the hotel industry and the airlines and the cruise ship industry and commercial real estate. It goes on and on. When you look at who's functionally bankrupt right now. If they let that happen, then we're back in a 1930s style deflationary depression. So they probably won't let it happen. They will probably do some kind of massive bailout that dwarfs what happened in 2020. That's what's so astounding about this. 2020, like you said, a 20% increase in the money supply. There's never been anything like that in history, but we might have to do something even bigger next year. And the impact of that is really hard to predict because it just dwarfs any experiment we've ever tried in terms of monetary and fiscal policy in the past. Um, so, what you do with your money is a really, really tricky subject right now. And again, I would say safe haven assets are going to do extremely well going forward. And by the way, we're seeing industrial commodities go up. Iron ore and zinc and aluminum and copper are all rocking right now. And part of that is, the same dynamic. There's a ton of money out there and it's sloshing around and it's got to go somewhere. So it's going into industrial commodities. Um, and the same story might be true next year with the added um, spice of those things that are going up now, the industrial commodities filtering over into consumer prices and causing the CPI and the other official rates of inflation to go up beyond the traditional target number of like 2%. So all of a sudden we could be, living in a chaotic world where governments are doing all kinds of crazy stuff and where inflation is starting to accelerate. That's kind of the wild card next year when they do all these bailouts, because normally mass bankruptcy is deflationary, right? It lowers prices. But if the bailouts happen on a scale commensurate with the bankruptcies that are happening, maybe we get inflation. Maybe people start to realize that their cost of living is going up by 4 or 5 or 6%, and they start acting accordingly. And so that's a whole different story from today. And again, it helps precious metals. I think you definitely want to be in gold and silver, and and then Bitcoin becomes kind of an interesting sideline to this. It's part of the story, but it's somewhat different from precious metals too. So you got to figure out, are the differences good or bad with cryptos? And should you be loading up on them, or should you be buying them in addition to gold and silver? Again, tricky times coming, but there's a strategy, and we only know this in retrospect, but there is a strategy right now that will make life-changing money for a lot of people. And we don't
Yeah.
know exactly what it's going to be, but we know some people are going to choose it, and they're going to become household names in the investment community going forward. Just as with the housing bubble, there were a handful of people who called it, bet big on it, made a huge amount of money, and then were immortalized in that book, The Big Short. That's coming again, something like that. And I don't know
Yeah.
whether it'll be another big short or whether it'll be Bitcoin going to 200,000 or gold going to 10,000. But there is a play out there that is going to make a handful of people extremely rich because they called it just right. And, it would be nice to be one of those people. That's the intellectual challenge now.
Absolutely. Yeah, I mean, I'm with you on gold. I'm with you on silver. I think the opportunity in Bitcoin is there as well. I mean, it's an early stage thing. It's $350 billion market cap. It has that early stage, more speculative, higher risk, higher reward, which arguably means that a little bit will go a long way if we're right on that. So I'm excited about that. I'm excited about what we have in gold and silver. I think it's going to face an uphill battle here as we do continue, if we do continue to see stocks go to new highs, because that's going to divert attention from the safe haven assets and pour it into stocks. And even JP Morgan, I saw a headline saying that gold will have a little bit of an uphill battle if Bitcoin continues on its trajectory, which I think is maybe a little bit of fear mongering for gold investors. I don't think Bitcoin is here to compete with gold, but is only part of the story. So, John, if you would share some closing thoughts here. And of course, if people want to visit you at dollarcollapse.com, share what it is they will find if they visit your website.
Okay, let me finish by saying a little bit more about safe haven assets. These are such tiny markets. Like you said, Bitcoin is 350 billion or whatever. That's chump change compared to the bigger markets out there. So if money starts flowing out of stocks and into safe haven assets, there's plenty of room for gold, silver, and Bitcoin to all go up. So I don't think that it's an either or proposition. So when the phase change comes and people start getting into real assets, as opposed to financial assets, then it's going to be a very small door for all that capital to get through. And gold and silver in particular should just go through the roof. Now, I run dollarclaps.com, which is a site that covers all this stuff on a daily basis. And I have a join the email list button there. You click on that, put your email in, and I'll send you whatever I write for free. And we don't sell your email address to other people for advertising.
John Rubino, everyone. John, thank you so much for coming on the show with me once again. You're a true friend of the program, and we love having you on.
Thanks, Kenneth.